Most would say a cash buyer is the ideal outcome. So why move away from that?
You know, it usually can be the ideal outcome. Cash gives you certainty, but seller financing gives you a little bit more over time. In the case of 2790 Ali'i Place, the seller didn't just walk away with a lump sum, but they got an income stream that was steady for the next few years. And for a lot of people, it is the best as far as taxes go. So a current one that I'm doing with the seller, it helped them alleviate a large capital gains. So their accountant highly suggested this. And depending on what your accountant says, it can be better for you because you get the money drawn out over time. And if it's better for your taxes, you're actually saving money. And as the bank, you're making that extra return. And the interest rate goes to you, not traditionally like it would to a bank. And I had one that I did a couple years ago. And the reason that it worked best for that seller is they weren't great with budgeting their money. And so if we had handed them, let's say $1 million cash up front, that $1 million cash based on historic behavior might have been blown in the first year. So it is based on someone's personality type and what their circumstances are, especially after the fire. Everybody was in a different place, and the seller liked the fact that they would be getting a set amount monthly for X amount of years so they couldn't overspend. And by the time it was all said and done, and the buyer would get out of it in 5 years by going through a traditional bank, it allowed the buyer to save the money because it was a piece of land that would be needed to put down on that land. And the seller was able to get used to a budgeted amount, what they could afford every month on that. And it just helped them make the most out of it because they were able to make about $150,000 more over the next few years just by being the bank. So someone in a retirement age, that's a lot of extra money for just an extra 3 to 5 years. And it helped them stay on a budget. And that works for a lot of people. We all need those types of limitations sometimes.
And for the buyer, how did this structure change things?
So this structure really took away the limitations of a bank, and it just opened the door wide open. There were no rigid underwriting. There was no bank delay. There was just a direct path to ownership, and everything was flexible in the terms. And on a, in a market like Maui, that kind of speed really matters because a lot of times we are able to close seller financing in 3 to 4 weeks, which is unheard of if you're going through a bank or a lender a lot of times. And so this really worked out for the buyer. It was exactly what she was looking for.
So in essence, is it a win on both sides?
Absolutely, it is a win on both sides. And the correct deals, the best deals out there, it's always going to have to be a win-win so that both sides are happy. And I find myself, doing a lot of dual agencies, meaning that I represent the buyer and the seller, and I need to find the middle ground, but something that's also a win-win to both parties. And then if you throw in seller financing and using an agreement of sale or a principal money mortgage, then that's drawn up through escrow with an attorney, and those terms can be negotiated a little bit and are a little bit more flexible. So it's very important that everyone win and be happy when the deal is done for it to be a great closing.